Don't panic. But if you've been checking your portfolio lately, it's likely that you already are. Trump's tweets on tariffs,
which of course is short for a terrific idea,
have turned Wall Street into a roller coaster. One day, the market is crashing.
Tariffs rattling investors, sparking dramatic losses.
The next day, it's rallying.
Wall Street surged today.
You could get financial whiplash out there. And it's tempting to think, should I just sell and wait for the dust to settle? But this instinct to sell low and wait for a re-entry, that's how people lose decades worth of gains in just a few days. Let me hit you with a stat that might change the way you think about all of this. If you missed out on the 5 best trading days from 1988 to now, you would drop your returns by 37%. And that's just in 5 days. It's nearly impossible to time the bottom and the top of the market. It is an exercise in futility.
resistance is futile.
Now, and I get it, a recession might be coming. Some say the recession is already here. But what most people don't realize is that from 1950 until now, there have been 11 recessions. And in 5 of those recessions, the market actually ended higher at the end of the recession than it did at the beginning of the recession. That's right, higher at the end of the recession. And the market actually starts recovering before most recessions end. So if you're waiting for the all clear to jump back into the market, you're going to miss that rebound and substantial gains in your portfolio.
What is he doing?
He's beginning to believe.
And there's another myth that you can just avoid the lows and just ride the highs of the market. So if we look at this graphic from Fidelity, what it's trying to show us is that 11 of the worst trading days actually happen in years with positive returns. And 10 of the 20 best trading days actually happen in years with negative returns. So it's almost impossible to know when the best days and the worst days in the market will actually happen. From 1950 to now, the market has experienced a lot of volatility, but on average, it's returned 15% per year. So if you're sitting on the sidelines, waiting to time things, or predicting the next Great Depression in the market,
Magda, make America Great Depression again.
you're going to be wrong far more often than you're right. So what am I doing right now? My strategy hasn't changed from when Trump first got elected, or when Biden did, or when Ukraine got invaded, or Israel got attacked. My plan hasn't changed because it is built to handle the chaos. I'm not reacting to any of the news cycles. I'm invested for the next 15 to 20 years. I'm consistently buying into the market and patiently waiting for the future. And that is why I am sleeping like a baby. Now, if today's volatility has you stressed, that is not a market problem. That is a portfolio problem. It probably means that your current portfolio is not aligned with your risk tolerance or your goals. But don't panic. Over the next 6 to 8 months, you will have a chance to rebalance into a portfolio that aligns with your goals. Prices will recover, cooler heads will prevail, because buying high and selling low is literally the only way to guarantee that you lose at the stock market. So keep dollar cost averaging, keep your expense ratios low, stick to your plan, and ride out the storm. The market rewards discipline, not predictions. And if you've made it this far in my video, thanks for watching. Please leave a like on this video so the algorithm knows to show it to more people. And subscribe to the channel because I give practical advice like this every single week. And if you're wondering why I am still so optimistic on the future of the stock market, I did an entire video on why the AI boom is just getting started and the future is brighter than ever. Thanks for tuning in, and I will catch you next time.